Welcome to my channel and thanks for watching this video. Friends, as we have ended with one more week, so this is the time where we are going to analyze the US market again, and we will think about what will happen in the next or in the upcoming week. So welcome to another session of USA Weekly Market Report. Now, if you are looking at this particular market, more specifically, the last week has been hugely volatile and we are expecting the volatility to continue going forward. So let us discuss what are the important things in this market and how the market has behaved and what one can expect going forward. But before that, if you haven't yet subscribed my channel, hit on the subscription button. Also hit on the notification bell along with the all button to get my updated video notification. So the prime time news we have here is this one. Dow drops 500 points. Nasdaq hangs more than 2%. On the fears between the current happenings in between Russia and Ukraine. So this is what we have here. Now the market is focusing back again on this news. Now what makes it, why it is important? Because these countries are one of the major resources for natural gas and oil, more specifically the natural gas. So obviously it will push the commodity prices further or the energy prices further on the upside. Okay, so there are some vested interests which you can see as far as the commodity prices are concerned, and this also push the bond yields higher, which makes the equity market volatile, or I would say, which we will see a big correction. If not big correction, there will be some very big moves even within the range. And we have seen how Dow Jones have moved like 500% drop, and then when things normalizes, it can go back again 500 or 600 or 1000 points. So these kind of moves makes market very nervous, because this is not the normal way how the market reacts, because these are uncertain times, and because of this thing, because of geopolitics, the entire market, not only in US but across the globes, become jittery. So you need to understand this risk or this short-term risk, because the risk is in the short term. You will see the bond yields in the short term spiked a lot. Okay, and rest of the things we will see later on, or let us go through one after another. Then what do we have here? We have mostly in the last 2 days, again the geopolitical tension has indeed makes its big impact on the stock market. That's what I can say. Apart from that, this inflation thing. Okay, you have the CPI number. Yes, I forgot to mention the CPI number, and probably market tries to adjust it, and it has already been adjusted in the last trading session. But this geopolitical tension and fears push the market even lower. And let us see, do we have anything over here? No, we don't have, because you have the Fed decision, which we all know that they are going to make some big rate hikes. That has already been factored in probably by the market. Now the second thing is the inflation. Now the inflation is very important, and more so over if you are culminating or if you are combining it with higher commodity prices, and that commodity prices has been attached with the geopolitical tensions which has been erupting. And moreover, there are lots and lots of countries which are involved in that. We are living in some volatile times. I'm not saying that we will crash, or these kind of things does not necessary, because this kind of crashes does not happen time and time again. But the thing is, market becomes volatile. Now, why inflation is important? See, understand, this is the very simple thing. When inflation increases, the cost of borrowing increases, and when the cost of borrowing increases, it's very difficult for the companies, those who are small, those who are based on growth themes but they are not earning any profits, or they do not have any cash, or companies who are making a very little profit or having a very little cash. If the inflation is higher and they put their money, or if they borrow money from anywhere else, it will definitely put pressure on their P&L. So the profit and loss account gets deteriorated, and those companies who are not at all making profit, but because of a big central bank bond purchase or the big QEs, the stock has inflated higher. Now it is the time when the bond yield spike, and you will see these stocks started crashing because actually they do not have money to spend, and if they want to borrow money, they have to borrow money at higher rates. So this is a direct combination, and the result of which beyond a particular limit, because big companies, they know how to adjust their books, they know how to deal with this situation because they have money and they have experience both. But for the new companies or for very small companies, they cannot escape from this particular situation. Now what will happen beyond a certain point, the price will pass on, and we have to pay, the end consumer have to pay. So it's a lose-lose situation. Inflation beyond a certain point, it's a lose situation both for the companies as well as for the customers. So this is very important, and that's why market has been factoring in all these things right now, because market don't like uncertainty, and the biggest uncertainty is the tensions which has been erupting between Ukraine and Russia. Now when US is also involved, directly involved, then you will have European markets, US market, and because all the global markets are linked with it, you will see lots of things that has been changing, and meanwhile the commodity prices, the natural gas, everything moves higher. So let us see what has happened right now, and this is the last day performance as far as the US market is concerned. So this is the US market, and 500-point drops in Dow Jones, 394, nearly 400-point drops in Nasdaq, then 85-point gone in S&P 500. You will see oil is trading at 93.9. Gold has also inched up higher, so at least gold it's holding its level. Then you have the 10-year bond yield, it actually falls a bit, and the VIX has again started moving high, 27.36. So this is the risky zone. So this is the risky zone as far as the VIX is concerned. It does not look good if it continues to sustain above 25, right? Even 25 is very high, but 27, 30 and beyond 30 is not at all good, because you can see how stocks as well as the overall indices move. Generally we don't see 1,000-1,500 point worth of move in a single trading session. Apart from that, you will see all the commodity prices started moving higher, and then we have the treasuries. Although the treasuries close a bit lower, but the thing is the percentage change is actually unchanged. But you can see, if we will see on the charts, the 2-year or 3-month treasury, it's actually started trading higher, and the simple reason for that is risk. The near-term risk is very high, and that's why the bond yields or the treasuries has been inching up higher, and we have a very strong dollar index because of high inflation, and market is now satisfied that the rates are going to move higher. So this is another thing which you need to look at. So let us analyze the chart. So first we will see the US Treasury. As you can see, it is very expected how the US 2-year bond yield is moving higher. The treasury has been moving higher, and the simple reason for that is when the near-term risk is very high, people demand more even you are purchasing bond interest. So above 1.37, it's an indication towards 3 or even 5.3. So let us see what are the levels or what we can see going forward. So these are the two big levels that we are going to look at. Now the next most important thing is the VIX, okay, because until and unless the VIX calms down, it actually falls down, but again it started moving higher. So these are I would say some very bad times for the equity market, and if somebody is not comfortable with these kind of things, or somebody who don't have any experience and they just entered in 2019 and 20, it's very unnerving for those people, because this kind of volatility may crush you. the profits which you have made will deteriorate very fast. And if you cannot hold on to your nerves, and if you don't know what have you purchased in your past, then you are here for, this is not at all a good situation. People lose money in this kind of situation. Now you can see this is a Cvo Volatility Index, and if it moves, or if VIX standing higher above 26, it is indeed an indication of some big risk going forward. And in the short term, obviously these moves can happen in the short term. So above 26, the next two levels that we are looking here are 37, and then we have 49. So this is how things moves up, and this is how things looks like as far as the VIX is concerned. So things are not looking good. Now let's go to the Dow Jones Indices and let us see how Dow Jones Indices has been behaving, because the moves are quite volatile. And although it's not been moving beyond a range, but these kind of moves generally put pressure on the trend, and somewhere if the pressure escalates, then we will see a trend breakdown rather than the trend sustains. So hopefully it does not happen, but let us see. So right now the current range for Dow Jones is like this, because the levels are not changing. So you need not to bother about the levels. The levels are same, but the thing is, the volatility is unbearable. This is a very real thing, and I can't use any other fancy words to describe that, but it is really unbearable, this kind of volatility. You can make money, but the risk is very high. So what do we have here on the downside? 34,000, 37,700, and 33,000. Beg your pardon, 34,000, 33,770, and then we have 33,300. So these are your levels on the downside, and as far as the higher end of the range, you have 35,670 and you have 35,800. So this is the near term range, and you have 35,130. So these are the near term range we have here, and let us see how Dow Jones is going to move, whether it's going to move higher or lower. Right now it's in between a range, and there are some big or volatile moves that has happened, but the big question over here is whether the trend sustains or not. If it sustains, we will see some bright days ahead. Now the next chart we are looking here will be Nasdaq Composite. The Nasdaq Composite is also returning back to its previous support level, as we can see here. So the previous support level are definitely going to be retested. So there are two important support levels which we are going to look at. So the levels which we are looking here as far as Nasdaq is concerned is 13,290, and then we have 13,100. So if Nasdaq falls below 13,100, then the next support we will see here will be 12,400. So there are some big spikes which we have seen in the past, and the volatility or the lower end of the range will be same, because the moves on the lower end of the range will be as high as the higher end of the range. So there will be some volatile. So below 13,000 there will be huge problems ahead. So let us see whether Dow Jones as well as Nasdaq holds its levels or not. And crude is something which we are continuously talking about, and we can see the crude is very important, and the way crude is moving is just fascinating. Okay, and the geopolitical tensions keeps it moving higher, because until and unless there is no demand and supply issues, and in the past as well, it never works on demand and supply issues. It always works on geopolitics and what has happened on the globe and what are happening in between two countries. And you will see there has been drastic swings in between from the lower end to the higher end of the range. So $75 is gone, and now we are moving towards 107 and $116. So this is what we can see. So the simple thing to understand here is, until and unless the near term or the short term risk subsides, we cannot have any respite in the stock market. The moves are going to be very volatile. If it is in between a range, just hope for that. Okay, so the volatility is very high. If it breaks the range, we will be in a big problem. But if the big moves happen within the range, just hope for it. And once things settle down, I would say just hold your horses once things settle down, and then look for anything else right now. So this is the end of the video. Thanks for watching.